first of all, let me set the context a little bit. Okay, most of you would be wondering that, like, what is embedded finance, right? So let me start with, okay. So say that, like, I went to a furniture store, right? And I said, hey, I want to buy a recliner, this beautiful recliner, I want to buy it. And they say, okay, all good, it costs you 50,000 rupees. Oh, okay, I don't have 50,000 on me right now, but I can pay it at like in EMIs. And the furniture store guy says, we don't do EMIs, right? So then like I say, I can't buy it now. I can't walk out. So I am unhappy walking out of the store. And the furniture store is not happy because they lost a deal, right? Okay. So now this is where what happens. So the furniture store, they cannot handle it like any complex financial transactions like EMIs, or they cannot give loans because they're not authorized to do so. So they need a solution that can be embedded into their checkout process, right? Because the merchant comes to their shop or the merchant comes to their online shop, right? They need a solution that gets embedded into their checkout process. So that is the place where embedded finance comes into picture. So what exactly is embedded finance? So embedded finance is embedding the financial services, whether it be payments, whether it be insurance, whether it be loans, and all these things directly into non-financial platforms and applications. Okay. And what it does, it allows customers to access financial services directly from the place where they are. Okay, so if you typically look at it, like financial services, maybe like 15 years back, you would actually have to walk into a bank to say that I need to deposit money or like I need to withdraw money. Things have changed. Okay, you didn't walk to a bank, you walked into an ATM. Okay, things have changed further. You didn't walk to a bank or ATM, right? Like you locked down, you did like UPI or like whatnot. But all these are still financial systems. So now the next wave, and like it is happening in some places already, we'll talk about that. But the next wave is embedded finance, where financial services go to customers, not customers go into financial services, right? So it is actually a very big shift in terms of customer experience. If you typically look at in a day, if you want to buy something, how much time do you spend on Amazon.com versus like going to your bank and say, do I have money or not? You spend like probably 80% of your time on Amazon.com, exploring the product, looking at like various options, looking at it, like what is the best option for you. Maybe you spend 5% if you are lucky, right? Like on your financial services website to say, hey, right, like this is how I make payment, right? But there is like a lot of context, right? Like here, right? When you are browsing through your merchant website, or right, like physically when you are in a merchant store, you are going from aisle to aisle, there is a lot of information that is being carried, right? Okay. Merchants know that, but like they cannot use it like from a finance perspective. Banks don't know that, but banks can use it from a financial perspective. Okay. Number one. Number two, the other side, flip the coin the other side. Okay. Banks know some of the financial transactions that you have done before. So for example, like banks know you have bought a home. Banks know you have bought a car. So that means that like you need either furniture for your home or like you need accessories for your car, etc. Banks know that. But like when you go on to a online merchant or like a shop, they don't know that. They don't know you bought a home, right? So the spending habits of the customer, their affinity to buy a product, what kind of product like they would need, banks would not know. Merchants would not. Banks have like that information. So when you combine this and give a context to a transaction, then you can do heavily personalized offers. You can do very, very targeted offerings for those customers. And those targeted offerings are what they will come with embedded finance. Because embedded finance has both merchant side of the context and data, as well as it has the bank side of the context and data. Right? Okay. Now, to make this happen, right, what is important? What are the building blocks for it? The building blocks for it is obviously having the right data, right, from merchant perspective as well as from the bank perspective. And number two, have right set of APIs that are independently scalable. Okay. And in a minute, right, like when we go to the demo, I will say like why both of them are very, very important, right? So what does that mean, right? Like I need to have right data curated in the right manner, and I need to have independently scalable microservices. I need to have right domain-driven design done, right, like for my API's definition. A combination of all these things essentially is your composable architecture, right? So that is the reason composable architecture becomes a foundation for you to get the best value from enterprise, from embedded finance. Okay. So say right, like you have just like a quick check. So if you have a bank like this, where all your platforms are monoliths, right? Okay, customer lending, it runs a web service. Okay, your credit card runs a web service, your merchant runs a web service. So when you have like all these things, so this is say like one bank. And say like you have another bank where you have your APIs like already exposed, right? And they are domain-based service rather than like a platform-based service. Which bank do you think is ready to gain more from embedded finance? Right? Bank C. So this is the composable architecture. So with that, let us get into what are the benefits and the drawbacks of having composable versus non-composable. Okay. So I thought like most of us are here are developers and engineers. So I'm not doing a lot of presentation. So I will stop my presentation here and I will get into a little bit of code and Git. Okay. Let me show on. Okay. Okay. So why composable architecture is needed on both sides? See, if merchant doesn't have composable architecture, merchant side doesn't have composable architecture, what happens? They are tied to a bank. They cannot provide more offers to customers easily. They cannot give any customizations on their product to customers, right? And when banks are the providers, I mean, using banks, but it could be any financial provider, right? It could be a company like Stripe. It could be a company like RazorPay, right? It could be any of those things. So when the provider side is not composable, right? What happens? Okay. Our provider side is composable, you get like reusability, right? Because for a bank, whether you go to bank branch or whether you do it at like online or like whatnot, you need to do KYC, know your customer. You need to do anti-money laundering. You need to do like credit scoring, like when you give a loan. So all these services that are already out there with the bank, they become reusable immediately. Number two, faster time to market. Okay, now this morning, like I was talking to one of the folks, right, from Tesco, right? Tesco is doing some research apparently on using IoT devices in their aisles. Okay, and I don't know, you all know Tesco?
Yeah.
Okay, good. Yeah. So now combine that with, okay, from those IoT devices, if Tesco can feed the data back to a bank, right? And again, that can happen only if you have composable architecture. But on top of that, banks can use in which, right, like which what kind of products that customers are looking at. And based on that, they can provide real-time offers. And combine that with, okay, it could be a loan and it could be a loan plus insurance, right? So all that customization in real time and also faster time to market, like say onboarding a customer, onboarding a merchant or like whatnot, they become like very easy with composable architecture. Security, obviously, right? That is a big thing. And finally, right, like event driven, you're notifying, right, like your merchants asynchronously on what is the status and reliability they need to switch back to an alternate mechanism or like whatnot. So all those things, this combination can happen only merchant when merchant and bank or provider both are composable art, right? Okay. Again, some more diagrams that say the same thing, so I'm not going to dwell through them. Oh, okay. So now I am going to run through a small example, right? Like this is a trivial example, okay? But say look at from merchant side, like you have a product page and you provided like, all the checkout options, and in addition, like you also provide a finance offer. Now this finance offer becomes an embedded micro front end, say, right, like for on the merchant side, right? Then merchant side invokes an API on bank's micro front end and says, okay, give me the micro front end, okay? And there, right, like either they can pass the phone number or if they don't have like any of the customer ID details, and if we want to maintain the security, we can actually collect them on the bank side also. So bank get basic details of the customer, then says, okay, are they an existing customer? See, all of these again are microservices, right? So if they are an existing customer, well and good, let us look at offers for that customer, personalized offers for that customer. If they are not, then do a KYC and do a credit check, and again, based on that, come back to offers, okay? And if the customer has accepted the offer, then if not new, onboard the customer. So it's a new customer, like onboard them. And once the customer accepts the offer, then the loan is successful. And once the loan is successful or not, notify the merchant, and merchant updates the transaction status, and essentially it goes from there, right? So let me actually quickly show you that like how easily it is done. Okay, so this is all available as GitHub, and I think that like you all get my deck. So my deck also has a link to this site, so you can directly take it from there and do some more enhancements to it and contribute to this code. Okay, so essentially, right, again, some of you have probably looked at Git's path and said, hey, okay, all 5 days pass, 50,000, 30,000, whatever. Early bird said like 30,000. Okay. Now you said, okay, G, right, like what kind of options can I have here? Okay. You said, right, like I want to look at the offers. Okay. And say you are a, okay. So all 9 is a premier customer for me. Okay. So let me see what it comes back. Okay. It says you can do 0% EMI. Okay, you can do that. You can earn 5% cash back. And by the way, you have been a loyal customer to us, and you have 10,000 points with us with the bank, and you can pay from your 30,000. You can pay 10,000 with your loyalty points, and remaining 0% with 0% EMI in 6 months. Right? If you look at offer ID 6. Merchant side would have never known about this, right? So again, this is the power of, right, like when both sides come together, right? And say, right, like I choose this, and I say, right, like accept offer. Okay, loan is successfully originated. Now, merchant also in the status knows. If you look at like this middle place, like where I have this iframe, this is like bank's MFE, and everything else is merchant. So this is how like embedded finance works at a very, very high level, right? Just as a POC kind of thing. Now, if I want to go with a customer who doesn't have good history, this is all zeros for me. Okay, because they do not have good credit history, they are not onboarded. So now we're trying to onboard them. Okay, so let us say, what do I get? Okay, now transaction decline. Okay, please choose another payment. And merchant also knows about this. And potentially, like if it is a good UX, they would not even have this button enabled anymore. Okay, but yeah, so you saw like what the experience could be. And like if I want to add like again, the last 2 days I have been coding a little bit here and there. We were able to add like 5-6 offers easily. We were able to change offers. We were able to say, what if like I want to include loyalty? What if I want to include a stream coming back from merchants, right? So as long as like you maintain each of them as independently scalable microservices and independent microservice by definition is autonomy, right? Okay, yeah. So that is actually a very good point, both in terms of infrastructure as well as like their individual scale-up. Okay, and why is that important? Okay, say you are onboarding a new customer, okay, or like you're onboarding a customer in a new location where you do not have many customers yet as a bank, right? Now, all of a sudden, what will happen? Your customers needing KYC will go up a lot. So that means your KYC service need to scale up a lot. Then like what is our exactly, right? So essentially, right, like that independent service scalability, you should have. Again, that also becomes like a key when you are looking at embedded finance, right? And similarly, right, if you are going to a place where or like using a customer where you have like already loyal customers who have been like working with the bank for a long time, maybe all of a sudden like you will see a spike in your loyalty integration, some loyalty redemption, right? So this is where like the independent scalability becomes very, very, right? Yeah, sure. Okay, very good point. So though like I did not cover it, so that is actually something that I have been thinking is actually like I was actually planning to post something on it at a later point. But what? Okay, so now that is like another thing, especially for people who are freelancers. Okay, people like who are gig workers, right? So they do not have pay stubs, right? So if they apply for a loan, right, like without a proper payment history and like whatnot, to your point, they would not build good credit history, but like they have a means of like paying the loan, right? So that is actually the next step of evaluation that. So that is like the next evaluation that we are looking at on using a combination of AI plus credit score, right? So with AI, I can look at all the transactions that they have like in this bank or the other banks. With open banking architecture, you get actually transactions from other banks also. So we can use those transactions, mine those transactions to come up with what is the risk of this customer. Today, most of the banks traditionally have credit score as the only mechanism for offering loan or like any unsecured funding. But tomorrow, yes, like things are moving towards that direction. Yeah, but like again, that is a very good point. See again, once you have composable architecture, that is something that again you can plug very, very quickly into this kind of scenario. Any other questions?
But
Yeah, sure.
and is like you put on.
Yeah.
You have a credit card EMI.
Yep. Okay, so credit card EMI does not do all the personalization for it.
Yep, it's fixed.
It is fixed, right? But like embedded finance, by definition, it has to do personalization for you. Okay, so yes, credit card EMI is a very okay. Let me take a step. It is a very primitive way of doing embedded finance. Very primitive way. Any other question? Yeah.
Embedded finance on the US part of the way. So if it has to be something like a software to be divided up into small gadgets, so like our top service will receive that.
Yeah. So there are like two ways. I don't know like how many of you have seen Bajaj Finance plus Chroma combination. Okay, most of you have seen, right? That is actually like a very good example of embedded finance, right? Bajaj Finance is not into electronics. Chroma is not into finance, but you can do on POS, you can actually activate Bajaj Finance's offers. Okay, but like devices like POS, etc., one challenge with them is, to your point, they need like the software to be upgraded. So that actually becomes a tight coupling. Okay, so you need definitely something like a mobile or web or chat kind of interface for these things to happen seamlessly. Okay, anything else? Any other questions? If not, thanks a lot, guys.